Hey guys, welcome back to Alpha Commission. Just wanted to share a brief piece of alpha for you in case you maybe missed this. I know some others have been talking about it, but it may be important for the future because there is some confluence with past price action on the Bitcoin chart, where we are looking here at the Grayscale Bitcoin Trust chart. And what we can see is that clearly the Grayscale Bitcoin Trust put in a lower high, whereas the regular Bitcoin chart had a higher high. We got to 69K when we originally had only reached 65, 64K in the previous summer. But uh, this chart is interesting because this is where the smart money is trading. And if you have institutions and smart money trading on the Grayscale Bitcoin Trust, and they're putting in a lower high, then when we were shooting for the moon, trying to get to 100K, maybe we should have been listening to this chart. That would have told us, oh, a lower high, maybe we're going to get a lower low. And look at this. On the Grayscale Bitcoin Trust chart, we already have a lower low. Now, you may be wondering why I have this on the 16 hour. Well, that's just some issue with TradingView's data. If I put it on the daily, everything disappears. And if I put it on a different time scale, the numbers, they just don't align. So this is the chart that you can see, and you can play around with it yourself if you want a different view, but something's wrong with the data feed. The point is that when you look at this chart, you can get a nice overview of the market on the macro scale. And, there was a hint here that Grayscale was printing a lower high when on the regular Bitcoin crypto charts, we were getting a higher high. So everyone was getting really bullish, but Grayscale, the smart money, the institutions were telling us that they weren't as enthusiastic as we were. And all this way that we've fallen down, we've now come back down to the bottom of the channel that Grayscale is printing. Whereas on the Bitcoin chart, we're like up here relative to our summer low, right? So in the Bitcoin chart, we came all the way down to 30K, right? 29, 28, 30K. And right now, our price action is a little bit higher. Is there a little bit more enthusiasm in the crypto market than in the smart money and the institutional money? If so, why is that? Does the smart money and the institutional money know something that we don't? What I'd also like to point out is this is a very interesting approximate fractal of what we saw here before the Corona dump. And this doesn't have to play out in the same way. Certainly, there may not be some shock that comes up in, March, which coincidentally, that was March last year. But you can see we had this a nice pump from bottom, right? It's kind of a a rounded kind of price action here, rounded price action, nice pump, got a high, printed, you know, a low on a channel here, carved it out, printed a lower high, and then fell to hell. Now, was this going to round out at the bottom of the channel? And if so, if there's nothing wrong that happens, are we going to start rounding out? Maybe this prints just a little bit more price action. So maybe Bitcoin on the regular crypto charts, maybe it does come back down to like 30K or 28K, maybe even 25K. But maybe that's going to be the low if this smart money wants to hold. Now, it's also possible that this was meant to print, some type of relief rally here, right? Maybe this was meant to print a relief rally right here. This is a lower high, lower low. Maybe this is all just drama, right? As this correction was occurring. So maybe we're going to see something like that, something very similar where we get some type of a lower high. We got a lower high here, another lower high. And then maybe this is kind of like an A, B, C type correction. And then we start doing another type of wave, right? Anyway, this is just food for thought. I just wanted to present it to you and give a little bit of my own perspective, add some of my own insights as related to the previous price action of Bitcoin. I haven't heard anyone compare it to this section, but the individual who pointed this out to me, his name is Crypto Reda. So thanks to Crypto Reda for pointing this out in the Grayscale chart there. He's always bringing the alpha. And I did want to just open up for discussion. If any of you would like to come over to our group at Alpha Commission, that's a free Discord. Just sign up and just share your thoughts about what you think about this and what you think about this and how they may be kind of a fractal. Since we usually have the same players in the game, you know, trading the same coins, we often find fractals that reappear. And it would make sense that previous price action is similar to current price action if the same players were in the game. Now, what could make this dramatically worse than this situation? Well, what if there is a war with Russia, right, between Ukraine and Russia, and then Europe and the US somehow get sucked into it? That could cause a lot of supply chain issues, that could cause a lot of economic grief in the energy sectors, in the tech sectors, which are already stressed. Many companies are finding it hard to produce microchips and processors. Just the supply chains have not recovered from COVID yet. Many countries still have lockdowns and very serious problems with their hospital situations. Their healthcare is just overloaded. And even though the US has largely gotten back to business, many of those very key areas of the world where supplies do come from and where manufacturing occurs, they just haven't gotten back up to speed. So the supply channels are still stressed, which means that anything could push us back over into, an economic downturn. And that could be extended. That could be extended, especially if the US tries to fight inflation at the same time. Now, the reason why inflation has to be fought is because when we were back here, right? This was during the Trump era, during 2020. We needed to basically give out free money to almost everyone. I mean, just money was flowing out of the capital, just totally unaccounted for, just trillions of dollars, hand over fist, just taking it right out of the people's pocket and into anybody, into anybody's hand who was willing to take it. And this took two forms, direct stimulus, and it also was loans that basically were given out for free. Now, anytime you give out loans, it causes inflation. It increases the money supply. That money wasn't there before. It's kind of like imaginary money, right? So money supply depends upon the belief in money. And if you extend credit, you extend loans, if private companies extend loans, you increase the money supply. And the only way that contracts back down, the only way to fight that inflation, right? Because there's more money, so it's worth less, but there's more of it out there. The only way to fight that inflation is to have people default on loans, right? Which is not the ideal situation, or they're able to pay it back. And then you can slow it also by just reducing the rate at which loans are given. So this isn't really the government printing money, I mean, except for the direct stimulus. But the majority of inflation comes from companies extending loans to their business partners, to their clients. Whenever a retail store gives credit to their customers, the money supply increases. That that contributes to inflation, right? So one of the ways to fight that is to increase interest rates a little bit, just a little bit increase the interest rates, increase the interest rates, increase the interest rates. Whenever you increase interest rates, you make it harder for people to take loans. And that's how you fight inflation, because the less loans, the less inflation. The more money is being paid back, but less loans are being given. And it's very important to do that because inflation has now, reached this point where we're at like 7% or whatever, right? These huge numbers that haven't been seen for a while because, not only have past presidents, including like Obama and Bush and all these guys basically since Reagan, they've just been like spending money like crazy, right? And they've been spending so much money and, having this policy of having low interest rates for so long that the amount of loans that are out there is just incredible. The amount of risk that people are willing to take is very high because they don't owe much in loans. The interest rates are so low, they don't owe much. So if they lose that risky play, they don't have to have too many consequences if they lose. And one of the assets that's very high risk is, of course, Bitcoin, right? So when you pump a whole bunch of free money into the economy by making it easy for companies to extend loans, then institutions will come in and buy risky assets, and then we'll see this spike up. So here's where we get back to what we were talking about, right? So that's the big picture. Because of all that ability to extend very cheap loans with low interest rates, institutions were able to buy a lot of Bitcoin. Billionaires, institutions, smart money, call it whatever you want, they were able to buy it. However, sensing that there was probably going to be a pullback, sensing that we probably couldn't continue on that way forever, they probably got the idea that, yeah, interest rates have to rise at some point. You don't need to do emergency level low interest rates during a non-emergency times, right? Things are getting back to normal, so probably the interest rates have to go back to normal. They can't be artificially low, which means they can't artificially pump up the market. So, why would the smart money then be doubtful that Bitcoin's going to pump the way that it pumped here? Well, they might think, well, if interest rates increase, there's going to be less money supply, so less smart money, less institutions, fewer billionaires are going to want to take up risky assets because they're not going to be able to appreciate. They're going to be competing to get out of it, right? They're going to be competing to leave risky assets as interest rates increase. Now, if the federal government keeps its promise to get interest rates back to normal so that, the little guys who don't really own risky assets, right? They just are living month to month, paycheck to paycheck. They don't have the, free capital in order to invest into risky assets. They're worried about the price of milk. They're worried about the price of bread. They're worried about things that are directly inflated, you know, in price due to inflation. So they need interest rates to increase. Otherwise you're going to have a revolt from the ground up, right? From people who are not wealthy, who don't have that money to expend, and who can't get loans. They can't get loans as easy as these billionaires can. Billionaires can get get unlimited amounts of loans, right? But people living month to month, they can barely get any credits. A lot of them have very bad credit, so they can't get these type of loans in order to buy Bitcoin to improve their future. So this smart money knows, okay, the economy is improving, things are getting back to normal. Interest rates are probably going to rise. We're seeing little hints all over the world that, interest rates are going to go back to normal. It's time to get out. It's time to get out because there's going to be a correction. Now, that doesn't mean there won't be a relief rally before we go lower. This was a relief rally and then we crashed, right? The drama of this crash may have been artificial because of COVID, but probably this was going to play out anyway. This was having a downward slope all the way back here, right? COVID just accelerated it. It just dramatized it, right? But the free money helped a very fast correction. And now we don't have free money anymore. So let's say that there is a war with Russia. Let's say that there is some type of, you know, next generation COVID that takes out our supply channels. And inflation's already crazy because we've been spending money in such a crazy way since this time. Then we may not be able to catch ourselves the way that we did here. We may have a drop down, and then it may just play out into like a crypto winter, okay, where it takes a year or 2 years to slowly make its way back up to the previous all-time highs. And so it could take a very long time for Bitcoin to heal. Now, the smart money institutions, they don't know whether or not those interest rates are going to go forward or not. So they're just thinking, well, I better take my profits now. Better to take my profits than to lose them in a gamble. This is already a risky asset. I've already made a lot of money, right? Because zoom out and Bitcoin has actually increased a lot. And, they're just thinking, well, if we go to the maximum low, I'll just buy again. That's no skin off their back, right? They'll just buy again. They'll make even more money off of that than if they had stayed in here because we'll still reach the same highs, but they'll buy it at a much less risky area. Now, for, people being told to hodl by, influencers in the market, of course, if George, is telling you to just hodl, you're going to be fine. Just keep hodling. I mean, you could end up hodling for 2 years. When people tell you to hodl, make sure you know that hodling means that you better be ready to hold that coin for 2 years. Okay? If you're planning on selling something or you need that money in less than 1 year, then you are, by definition, trading. Because look at these seasonal ups and downs, right? Just up and down, up and down, up and down. If you needed your money for an operation here, but you bought up here and had planned to hodl, you're screwed, right? Same here and here. Same here and here. Now, you might luck out and maybe you bought here and you needed an operation here. Okay, you're great. But if you had just been willing to hold for 2 years, right? You're going to be fine no matter what. And so if you're a hodler, you better have a plan that what you're hodling is for 2 years because we can have some serious downs. We can have some very serious downs. And it can be far worse than what you expect, right? And the smart money is telling us that they kind of expected that. Whereas, regular money, right, who aren't really informed on what the Fed is doing and who has a lot of enthusiasm for the crypto market, they don't just see it as numbers, they see it as maybe something that they're passionate about. They were putting in higher highs. They were getting to 69K Bitcoin, thinking about 100K Bitcoin. Well, the smart money was telling us that's maybe not going to be the case this year, and that they wanted to get out at least, this quarter, right? At least quarter one of 2022. And maybe quarter two of 2022. You don't know. We don't know how long this dip could go on for. But at some point, they're going to get back in and the market's going to go back up because we'll be at a good value price, right? I don't want to, give any financial advice of what that price might be for these guys. You can, talk to your own financial advisors or come up with your own ideas, or you can discuss it together, in the group. But the point is, I'm not trying to mislead you on anything, just trying to let you know that maybe you had a good indication. And from now on, maybe you've learned something to double check with what the smart money is doing to see if there isn't something that gives you an indication of how they might be moving. And then to also consider how governments, respond to big news. Because if we are going to just continue to allow low interest rates to occur, let's say that we do keep falling. And the Fed says, okay, the stocks have been falling so low, and there might be a war with Russia, and there's still some supply chain issues in, Southeast Asia and other places, then you know what? Maybe we shouldn't increase, our interest rates too fast, too quickly. So we're just going to put them off. That may be unexpected news that helps us spike up. It might not be as enthusiastic as allowing all those, cheap loans to be printed, but it might be fairly enthusiastic enough for a good bounce. And then that might be your chance to get out of the market if you are holding on to something. And if we have better news, well, you could keep on holding or you could buy back, if the economy turns around or if there's something, miraculous that happens, world peace breaks out and inflation just disappears overnight, then maybe, maybe we'll have an ideal economy. But otherwise, you can imagine that this might take some time to work its way out, right? There may be some type of bull being put in here, and it could take into 2023 even. You don't know that. You don't know that. It's not necessarily going to be a V-shaped recovery the way this COVID dump was, when the governments all around the world, all at the same time, started writing checks, all at the same time. That was an incredible amount of money that's unprecedented, in the history of the world. More likely, you're going to have something that curves and then rounds, or that has a relief rally and then rounds, or goes sideways and then builds its way back up to the end of the year, gives some hope, that sort of thing. Just putting realistic concepts in your mind. Feel free to debate me. Come over to Alpha Commission. The link is in the YouTube video description, and share your thoughts. But there's your alpha for the day.